Welcome back. So the market continues to be in that narrow range, just around the 10,950 mark, not quite able to take it out. Earnings in full focus today. We will get numbers from ACC as well. What should we expect from this one, Nigel?
Well, first of all, we'll expect the numbers in the next 60 minutes odd, is what I'm told. The meeting is towards the end of, they started off at around 10:30 odd, so 3 hours, hopefully they'll be done. In terms of the numbers, well, we are expecting a top line growth of around 8.5%. Bulk of the top line growth will be because of volume. So volume number you're working with is around 7.35 million tons odd. That would be a growth of around 6.2%. So the remainder of the top line growth will be primarily because of realization. So we're talking about around 2 to around 3% or thereabouts in terms of realization growth. Remember, ACC has pan-India presence. So they gain because they have exposure to North as well as Central India. And that's where prices are higher. But otherwise, South, East, we've seen prices move lower on a year-on-year basis. So that's what really offsets each other. Also keep your eye out on, their premium product sales, because that's been moving higher. If they can sell more premium products, obviously, they'll make more money. Moving to the operating profit, out there we're seeing a growth of around 11%. Margin should improve by around 20 to around 30 basis points. Few factors playing out here. One is that higher volume, so operating leverage plays in. That's point number one. Point number two really is that they have signed that synergy benefit with regard to the master agreement with Ambuja Cements. So they cut down in terms of transportation costs. That should help them as well. And the third factor is that the axle norms, you can load more amount of cement. So that's what could help them. Net profit should jump up by around 24%. 60 minutes. I'm hoping it'll be with us.
Okay, so let's see if this is indeed going to stick to that timeline. 60 minutes is when the numbers should come in, says Nigel. That's ACC. We are also expecting numbers from Gas Authority of India. We have Sonal with those details. Sonal?
For GAIL, the first half was very strong, but we are not expecting good set of numbers in Q3 of FY19. That is because there has been a sharp decline in oil prices. The Henry Hub prices, they are at an elevated level. Also, the spot LNG prices, they are on a decline. Because of these three factors, the numbers will look very, very weak. So on a consolidated basis, we are expecting a revenue decline of around 3%. EBITDA is also expected to decline by around 14%, leading to a 170 basis point contraction in the margins. The profitability also is expected to be lower this time around by around 18% on a sequential basis. Now, if I split the numbers in terms of segments, for the petchem segment, we are expecting weak set of numbers because of lower realizations and also because of the shutdown, the 1 month shutdown of the Pata plant, and that is because of which the EBIT is expected to decline 64% sequentially. Even the petchem volumes are expected to be low this time around. Going to the gas transmission business, the last quarter was very, very strong because of the increased tariffs by PNGRB. So sequentially, we cannot really compare the numbers. However, the volumes, they are expected to decline this time by around 3% sequentially and 6% on a year-on-year basis. Moving to the LPG and hydrocarbons business, the EBIT is expected to increase 12% sequentially because of higher LPG prices. And lastly, the gas marketing business that did very, very well last quarter. So that is not expected to do very well. We are expecting a 50% sequential decline in the EBIT because of all the factors that I spoke about, the lower oil prices and also decline in spot LNG prices. Back to you.
Okay, all right. So now thanks so much for joining and giving us those details. Well, we have CESC's numbers. The initial number in terms of revenue that appears, it's a bit of a miss. That's down by close to around 4%. But interesting to see the net profit is better. So the operating profit is something that we look at very, very closely. The stock has come off a tad bit from the high point of the day. But we'll need to find out whether or not the reason for that net profit beat is because of, the operating profit, or is there some one-off in the middle? Let's just hang on and try to pull in more details on that front. I think we should get the operating profit with us very, very slowly. All right, I'm just trying to pull these numbers up for you. The stock now more or less stable as we speak. Revenue number of 4% miss is what we're seeing. I'm not able to open up that release. Would be any luck on that front?
Let me see if I can get to it, but no, not immediately. The ones that we have on the screens are the only numbers that I have. No, all right. We don't seem to have it, I think.
There's a regulatory income that's come at around 200 crores. That compares with around 60 crores. So that could explain, because there's a threefold jump in those regulatory income. That's what could have supported really the bottom line as well in there. I'm just trying to do a rough math in terms of what the operating profit could be. That's around 180. It'll be roughly around 245 crores, I think. So I think we should get that number as well up for us. Let's do one thing. Let's slip into a break. We'll come back there's the EBITDA number. EBITDA number actually has come in closer towards 200 crores. Now, the number we were working with was around 370 crores. So let's see whether or not there is any sort of a big spike in any of those expenses. Other expenditure, no, that's up by only around 10% odd. So it appears that because there's a miss on the top line by close to around 70 to around 80 crores odd, that's further percolated down. Because otherwise, that's a big miss in terms of the operating profit number. Yeah.
So the only thing I can see is cost of fuel. I mean, year on year, there's a bit of a jump. It's about, but it's not massive. I mean, it's about
when you don't have growth on the top line, and when you have cost of fuel moving up by 10%, you have other costs as well, like other expenditures up by nearly around 8 to around 9% odd. So costs moving higher, and even employee benefits. Actually, employee benefits are up by more than 10%. That's up by nearly around 15%. So that explains why there's a bit of a miss in terms of operating profit. Top line miss of around 4%, 3.5 to around 4%. That's around a 70 crore miss on the top line. And in terms of the EBITDA number, that's degrown by nearly around 35% odd. The net profit, I think it's higher because of that regulatory income. That came at around 200 crores. That compares with around 70 crores. Remember, on a sequential basis as well, the only reason that the net profit has held up is because the regulatory income has come in at 200 crores. That compares to less than 40 crores on a sequential basis as well. I think the numbers operationally will go down as a weak set of numbers. We'll come back. We'll try to analyze more on those numbers. Business Lunch will take all the action forward.